The 2017 federal budget explained in 5 minutes. This is general advice only. Please seek personal advice prior to making any decision. Please also note that many of the announcements are not yet legislated. Deficits are expected to be in line with last year's projections, with some optimistic economic figures projecting a $7.4 billion surplus in the 2021 financial year. The government will need to issue bonds, which is government debt, of $647 billion, with net debt, that is what we owe less what we own, expecting to peak at $375 billion in the 2018-19 financial year, a year later than last year's projections. The key measures in the 2017 federal budget include housing affordability, taxation, superannuation contributions, and social security. Looking at taxation first up, from the 1st of July 2018, tertiary education debt will need to be paid back at a greater rate and on lower incomes than previously. From July 2019, the Medicare levy will increase by 0.5% to fully fund the National Disability Support Scheme. Currently, small businesses with an annual turnover of $10 million or less are able to claim an immediate deduction for eligible assets costing less than $20,000 each. This measure will be extended for a further 12 months until 30th of June 2018. With significant superannuation changes last year, super was largely untouched in this year's budget, except for 3 areas. From the 1st of July 2018, individuals aged 65 or over who have owned their own home for 10 years will be able to make non-concessional, that is after-tax super contributions of up to $300,000 or $600,000 for a couple using the proceeds from the sale of the family home. It will not be necessary to meet the work test or have a total super balance under 1.6 million to make the contributions. However, the fact that the amount contributed will not be exempt from the Centrelink age pension means test, and that stamp duty is another impediment to downsizing, it means the strategy will only be utilised by a narrow cohort of people. First home buyers will be able to save for a deposit by making voluntary concessional and non-concessional super contributions. Contributions will be limited to $15,000 per year, up to a total of $30,000, and will count towards the relevant contribution cap. Withdrawals of amounts contributed, plus associated earnings, can be made from the 1st of July 2018. Concessional contributions plus any assumed earnings withdrawn will be taxed at the person's marginal tax rate, less a 30% tax offset. The government has provided an online estimator to help individuals calculate the potential benefit of the scheme, which could be in the order of $6,000 depending on your circumstances. The loan balance of newly established limited recourse borrowing arrangements will be included in an individual's total super balance, which is used to determine a person's eligibility to make non-concessional contributions, qualify for the government co-contribution or spouse contribution tax offset, and to make catch-up concessional contributions. Looking at social security, from the 1st of July 2017, individuals who lost entitlement to the pensioner concession card as a result of the 1st of January 2017 asset test changes will be reissued the card. This is a great concession to those pensioners who have lost up to $14,000 in annual pension payments. On the 20th of June 2017, eligible pensioners will be entitled to a one-off energy assistance payment of $75 for singles and $125 per couple. To be eligible for the age pension and disability support pension, claimants will need to have 15 years of continuous Australian residence unless they have either 10 years continuous Australian residence, with 5 years of this being during their work life, or 10 years continuous Australian residence without having received an activity-tested income support payment for a cumulative period of 5 years. The maximum liquid assets waiting period will increase from 13 to 26 weeks. The waiting period is how long an individual is expected to utilise their own savings prior to receiving government income support. Family tax benefits Part A. A single taper rate of 30 cents in the dollar will apply to income that exceeds the higher income-free area of $94,316 in 2016-17. Currently, 2 tests are applied and the higher payment determines the entitlement. Family tax benefit payment rates will not be indexed for 2 years. Indexation will resume on the 1st of July 2019. If you have any questions or would like more information about the superannuation changes from last year's budget impacting this financial year, check out cornerstonewealth.com.au/2017 super changes, or contact Cornerstone Wealth on 1300 275 428 or Christian Super on 1300 360 907.